A required minimum distribution is the amount that you must withdraw from your employer-sponsored retirement plan or your IRA account when you reach retirement age. In 2023, the age is 73 for taking required minimum distributions. Some people don't want to take their required distribution in a particular year because distributions increase taxable income. Required minimum distributions can possibly push you into a higher tax bracket and affect some of your tax credits and deductions. In some cases, it can also affect your Medicare Part B and Medicare prescription drug coverage premiums. If you don't take your required minimum distributions, you will get a 25% tax penalty from the IRS. One way that you can avoid the 25% penalty is to make a qualified charitable distribution. Sometimes a qualified distribution is referred to as a QCD, and some refer to it as a qualified charitable donation. If you make a QCD, you can fulfill all or part of your distribution requirement without increasing your taxable income. As long as you're 70 and a half or older, you can transfer up to $100,000 from your IRA and donate it to one or more qualified charities during the tax year. If you file taxes jointly with your spouse, both of you can donate separately up to $100,000 to charity. The total sum to all charities cannot exceed the $100,000 limit. Starting in 2024, the maximum of $100,000 will change each year based on inflation. You can make a qualified charitable distribution from a traditional IRA, Roth IRA, rollover IRA, inherited IRA, SEP IRA, or simple IRA. You cannot make a qualified charitable distribution from a SEP or simple plan in a year when you have made a contribution to the plan. You cannot take a qualified charitable distribution from a 401k or any other qualified plan. It is really rare to make a QCD from a Roth because most distributions from a Roth are tax-free. If you need to take a taxable distribution from your Roth, you should consult a tax advisor to determine if making a charitable distribution from a Roth is appropriate for your situation. If you're taking withdrawals from your IRA, but you haven't reached the age when you have to take required minimum distributions, you can still make a qualified charitable distribution. Once you reach the age when you must take required minimum distributions, then a QCD will count toward your required distributions. The funds must be transferred directly from your IRA to charity by December 31st in order for it to count toward your required minimum distribution for that year. It has to be a direct transfer of funds from your IRA custodian payable to a qualified charity. You cannot withdraw the distribution yourself and then give a donation to charity directly. If you make the donation directly, it won't count as a qualified charitable distribution. If you donate more than your required minimum distribution for the year, the extra amount will not count toward the required minimum distribution in a future year. You do have to be careful not to contribute to an IRA in the same year that you make a qualified charitable distribution. If you do, you will have to reduce the QCD by the amount of the IRA contributions that you made during the year. Not every charity qualifies for a QCD. Before you make a distribution, please check the IRS database of qualified charities. I will include a link in the description box so you can check to see if the charity you are considering is in the database. Starting this year, 2023, a qualified charitable distribution may be taken to fund a charitable remainder unitrust, charitable remainder annuity trust, or a charitable gift annuity up to a maximum one-time amount of $50,000. These types of trusts are used in estate planning to create a steady income stream for the donor while donating to charity at the same time. I plan to make a video detailing the tax benefits of using these types of trusts and contracts. Please be sure to subscribe to catch that video. Whenever you make a QCD, and if it's for a non-inherited IRA, it will be reported as a normal distribution on Form 1099-R with an appropriate code put in Box 7. If it's for an inherited IRA, the distribution will be reported on Form 1099-R as a death distribution with the number 4 in Box 7. So when you're ready to make a qualified charitable distribution, your first step is to decide how much of your required minimum distribution you would rather give to charity and exclude from taxable income. You can only choose an amount that would be taxed as ordinary income. The second step is to have the custodian of your IRA transfer the funds directly to your qualified preferred charity. When you prepare your tax return, you will enter the entire amount of your IRA distribution, including the amount transferred to charity, inside Box 4A. In Box 4B, you will enter only the taxable amount of your distributions. The amount that was transferred to charity will be excluded from Box 4B. Now, you can't take an itemized deduction for a qualified charitable distribution on your tax return, but the nice thing is that you don't have to itemize deductions to take a QCD. So even if you take a standard deduction, you can make a qualified charitable distribution. The rules may be different for your state income tax return, so please check with your tax advisor for guidance. When you make your qualified charitable distribution, please make sure that you receive the same type of acknowledgement that you would need to claim a deduction for a charitable donation on your federal income tax return. If you normally give to a charity, you should consider using a QCD as a tax strategy. Instead of donating cash, you could make your normal charitable donations through your IRA instead. For instance, if you normally donate $10,000 a year to a church and you are required to take a $25,000 a year distribution from your IRA, you could have the $10,000 donation sent directly from your IRA to your church. So in this case, you would avoid an increase of $10,000 to taxable income due to your required minimum distribution while donating to a charity that you were going to donate to anyway. This strategy is especially useful if you aren't able to itemize deductions on your federal tax return. So if you normally take a standard deduction on your federal tax return and make donations to charity, this strategy is a backdoor way to benefit from your charitable donations without having to itemize. Please remember that you can only use a qualified charitable distribution for an IRA. If you want to know more about required minimum distributions for an IRA, please watch one of the videos on your screen. I do appreciate you spending time with me and subscribing, but this was not official tax advice or legal advice. Please consult with your tax advisor for personalized planning. Although I may not be able to give you official advice, feel free to ask me a question in the comments section. All the best to you.